now these kind of events are more important than ever because like bringing together people, that's where the true magic happens.
So, Raphael, great to have you here.
Roland.
Yeah, and I would just start straight away with the first question to get right into the topic. And I looked at your CV. You were previously, in finance. You were at IB, at Deutsche Bank, and then you transitioned to Fintech. You founded Getquin, and now you're at Getquin like 4 years till now. And I want to ask you maybe what are the biggest differences from Fintech compared to maybe more regular finance, or even the biggest similarities?
That's good question. Yeah, it's tough to answer because you know when I was at the bank, I was covering financial clients, including as well fintechs.
Yeah.
But let's say the knowledge you bring from the bank into, let's say, building a company or putting an idea into a company, it's fairly limited in the sense that yes, you have the soft skills that you learn, but from hard skills, you don't know. So it's pretty much learning on the go. And so for me I think the real chunk with the change was really technology because in any investment bank, even if you cover really tech clients, let's say your access, your understanding of technology is always very on the surface. Or when then you have to build it, you really understand, okay, what it actually takes to build an app, to hire developers, to build a product. And so it's fully, I would say fully different. Where the skills can help is in terms of financial planning. And I felt as well in our initial fundraising rounds, it did give, maybe it's comfort to some investors, okay, there's someone with a banking background, so at least if you look at the business plan, it's probably going to be somehow, I wouldn't say achievable, but at least reasonable, okay, I understand, but
Yeah. Okay, and would you now consider yourself a technical founder as well? If you say it tends so.
no, so I was lucky. So we are two founders. So my co-founder was always looking at products, and I was doing the, let's say, the non-tech or non-product topics, operations as well, marketing for quite a while.
Yeah.
And I think our first product we built it, the two of us together, and mainly him then I, with some freelancers. And then when we had our first funding, we built quickly a tech team, because particularly in the fintech space, the product needs to be good. So we focus not too much on the brand, but really on the product, on the tech behind, because that's your edge as well compared to other competitors or the new incumbents.
Okay, yeah, I understand. So now we can talk about Getquin, your product, and what it can actually do, how it can help you manage your assets in one place and really have your whole portfolio, let's say, tracked down. And I would just start with one question, maybe for people that are not that versed yet in how they can manage their portfolio. What are the key KPIs they should look out for?
Yeah, it's a good question. So maybe as well for people that don't know what Getquin does. So we are there to empower people to invest better. And so we provided a platform where you get all the information you need to act upon your investments. And so that's information about, so you were already mentioning your own investments, but as well information about how I'm investing, how you are investing. So we have a social layer where you can ask questions and so on. So now speaking about your question about what KPI should you look at, and that's the beauty about what we do, it's super personal. You may tell me that my aim is to get 10% on a yearly basis. Maybe I tell you, that's for me way too risky. I'm happy if I have 7%, or maybe I want 20%, So I always say, look at a return where you are comfortable with. Definitely look at diversification of the portfolio. So typically look at what percentage of my portfolio is in a single stock, is in a single sector, is maybe even in a single economy, I mean, US obviously is the big elephant in the room, like try to maybe not just have 100% US companies, try to have a mix. Again, it's personal. So we try to give people all those insights, but then they decide what is a fit for themselves,
Okay, yeah. So now we've already talked about portfolio mix a bit. Now, maybe for you personally, what do you think in the current times is a good portfolio to have?
That's the golden question. So just from my personal view, I like to have things I don't need to look at it every day, like a savings plan. It's a savings plan, which is as well very popular in Germany, Sparpläne.
Yeah.
This I do every month since quite a few years. I check the performance, but it's not that I'm like, should I sell, should I buy this?
Yeah.
But then on the stocks, I buy, for example, stocks where I really actually either know the company because I used to cover that sector previously at the bank, or like, for example, I have a big position in Amazon because I order every week on Amazon I watch Amazon Prime. We order at the company with Amazon. So if I use a product, I can own the stock. That's always been a bit my mantra. And I think the portfolio should always be kind of set up that it can weather the ups and downs of the journey, because stock markets needs to go down to go up again. That's otherwise it would be too easy, And so I always say, like, have a portfolio, at least a big chunk of your portfolio that is fixed and it will go down, but then it will go up again. So let that flow. Then have a little part where you can experiments, exactly. Some call it experiment, some call it play. That's your decision, but indeed, so that you can as well learn as well, discover new topics, new sectors, new stocks, and not be too fussed about if you kind of lose, I don't know, 3, 4, 5, 10 of your portfolio. And maybe lastly, it's very important that your investor portfolio should never be your cash machine. So just invest the money that you know that you don't need, let's say, tomorrow if something would happen,
Yeah. And now, and maybe about the not investing, but experiencing part of a portfolio, are there some maybe more obscure asset classes you find really interesting or really cool to experiment with?
Yeah, so initially when I was at the bank, I was very restricted in what I was allowed to trade. So stocks was off the table and ETFs was very limited.
Yeah.
So I did a bit of crypto, but then that space is now so, I wouldn't say complex, but there's so much different things you can do.
Yeah.
That now, for example, I barely touch it anymore. I still have, things I did back then, but now I would not have the time or really the interest to research all of this up, to really be like, okay, that's now a really good investment. So I think, small caps often, was very interesting because they usually still have a lot of growth potential. And so that's something like, I do very little trading, but like a bit of trading, sometimes I do. I just enjoy then researching, so maybe some smaller caps in a sector where I'm just interested. This can go from financial sectors to automotive, consumer, whatever.
Yeah, perfect.
So no particular niche.
Yeah, and now I would move to a more general question first before we move to the quick three. Because we have young students mainly that will watch this, and should you go to investment banking or to a more, let's say, regular finance path first before you join a fintech or found a fintech, or do you think you can straight away go into fintech?
I think back then, so I was living in London when I was working for the bank, and I did not feel that there was a lot of, let's say, tech jobs or jobs in startups that were appealing for me as a student. So I finished my master's in 2015. I think now, almost 10 years fast forward, I think it's different. I think now tech companies got really more attractive to particularly young talents. And I see, because when I see people, my former colleagues at the bank, they're struggling to hire people.
Okay.
Like, and when I joined the bank, it was like you were struggling to even get a job at the bank. And now it's almost the other way around. They have to bump salaries and so on to keep attracting people, because tech companies can pay competitively and you can learn a lot, So I would not say you should go to investment banking, or you should not. For me, I had studied economics, then finance. So for me, it was a bit a logical next step, but I never saw it as, okay, I'm going to do this and then stay in the bank for the rest of my life. So I saw it more as a bit of a CV kind of, a CV stable, if you can call it that way. Something like, I'm learning a lot here. I get a lot of exposure to clients, and I can do something else afterwards. I can always go back to a bank. Having a bank on your CV is never a bad thing, or consultancy or audit and so on.
Maybe a bit of a safety caution to try out things. Yeah, just like founding a startup. As you did. Okay, perfect. So now I would move on to the quick three. These questions will be answered in just one word, a give example, or one sentence. And I will start with the first question. Most profitable asset class in a span of 50 years.
Stocks.
Yeah. And then best career decision you've ever made.
Getquin.
And now the last question, what's your impression of this year's idea in one word?
Impressive, I would say.
Impressive. Okay. Thank you, Raphael, for your time, and can't wait to see you next year, hopefully as well.
We'll see you next year.
All right. Thank you. Bye-bye.